Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, guys, that was a hell of a week. Let's take a quick look back, then we'll cover some of the week's events, and then some analysis for what's ahead. From Yahoo Finance, ending a rough week on a high. The S&P 500 clawed back some of its losses Friday, but still finished the week down around 1.5%. The Nasdaq finished 3.2% down. Meanwhile, the small cap Russell 2000 finished the week up over 3.1%, underlining the current rotation away from tech. Inflation keeps September in focus. Helping that rotation towards interest rate sensitive small caps were Friday's inflation numbers. The calm but expected personal consumption expenditures, or PCE, reading for June didn't change any narratives Friday, with the core figure that strips out food and energy coming in as expected at 2.6% compared to a year ago, the slowest rise in inflation since March of 2021. June's data should give the Fed an open door to cut interest rates at the September meeting. Wall Street breakfast put it a different way. Look out below. Stocks only go up until they don't. The Nasdaq on Wednesday suffered its worst day of 2024, with the tech-heavy index sliding more than 3% for the first time in more than 400 trading days. The plunge wiped out hundreds of billions of dollars in market cap from the Mag 7, as results from Alphabet and Tesla underwhelmed, with investors increasingly demanding returns for hefty AI investments. Looking to put a halt to the wipeout, the U.S. GDP growth accelerated in Q2 and topped estimates, highlighting a resilient consumer and more business spending in the face of economic worries. And then from the crypto world, the cryptoverse notched a new milestone on Tuesday with the launch of spot Ether ETFs following their approval by the SEC. However, the 9 new ETFs concluded their first trading session lower, as the crypto slipped and concerns surrounding net inflows remained. Now that the funds are live, investors are focusing on whether the Ether holding ETFs can achieve net inflows comparable to those of their Bitcoin counterparts, although skepticism remains prevalent. In recent news, former President Donald Trump, a crypto defector turned advocate, will headline the world's largest Bitcoin conference this weekend. Now, I want to go on record right now and predict that the XRP ETFs that will come out after the case settles with the SEC will be bigger than both Bitcoins and Ethereums. I said it. Investors that want some exposure to crypto that were prohibited from accessing it in the past will buy some Bitcoin and Ethereum if they haven't already, but will be overweight on XRP. That's my prediction because of XRP's price point, and mainly because Bitcoin and Ethereum have already made their runs. Big potential price action will rest on the coin that hasn't had its big run yet, which is XRP. Just my opinion, not investment advice or advisor. Now, this is what I want my subscribers to know. Where are we at compared to other pullbacks in history? The chart on your screen is titled Max Drawdown Low Relative to History. S&P 500 max drawdown during the second year of a bull market, right? This chart depicts how a big bullish year might still have a painful setback. In the second half of a bull market year, the average deepest setback is around 9%. Okay, that's the middle arrow. About twice what we've seen so far. We're at 5.5%. I'm not saying the bull rally can't recover and resume, but I am saying if we fall, we've got a long way to go, especially compared to that 2008, 2009 drawdown of 16%. Whenever Wall Street is rotating from one big sector to another, that's exactly what you need to watch. Weekly subsector performance. What's up the most and what's down the most can give you big clues where the money is flowing. I, for one, don't want to be buying stocks in a sector that's bleeding billions, right? I don't care how well it's doing. So with the big indexes, we already covered that. The Russell 2000, the small caps, were up the most, up 3.5% to 2260. The NASDAQ, aka Big Tech, was down the most to 17,358, down 2.1%. Under the S&P sectors, utilities were up the most on the week, up 1.5%, closely followed by materials, up 1.4%. Telecom got murdered the most, down 3.8%, followed by IT, down 2.4%. When it comes to commodities and bonds, crude oil WTI was down 4.6% to 76.44. Gold lost 0.6% to 23.85. Natural gas down 5.7% to 2.042. And the 10-year bond yield stands at 4.194, losing 0.24 basis points. Under Forex and crypto, things worth mentioning here. Bitcoin was up 1.1% for the week. Ethereum down 7.6%, but XRP was up 0.8%. Here is another useful tool to show you where the money is flowing. I point this out because the financial media will only tell you about it after it happens. In uncertain times, I want less exposure where the money is flowing out of, and I definitely need to know where the money is going. Go to the Wall Street Journal Markets tabs. Here I can see the 5-day percentage change and the year-to-date percentage change. So under the Dow, who is leading the 5-day percentage change? Utilities. What about year to date? Well, after the total stock market at 13.62%, again, it's utilities up 10.18%. What does that tell you? Then you go to the S&P, who's leading the charge on the 5-day percentage change? The small cap 600. Year to date percentage change? The S&P 100, okay, the big guys. Then under NASDAQ, who's leading the 5-day percentage change? Biotech, 2.52%. Why? A lot of small caps in there, right? But then the composite is still leading the year-to-date percentage change, but now it's only 15.63%. Since utilities are tearing it up lately, I have one of my favorites on the screen you could add to your watch list or your ticker, and that's GUT, G-U-T, or the Gabelli Utility Trust. That's the monthly chart going back to 2017, and speaking only for myself, I prefer utilities for income over bond funds, treasuries, and real estate investment trust. And there's a simple reason for that. I trust them more. If you don't pay your electric bill, they turn your electric off. If you don't pay the water or gas bill, they turn it off. They've got an ironclad collection policy, so they are my personal preference. GUT closed at $6.10 on Friday, and at that price, you could expect to earn a dividend yield of 9.85%. But they pay monthly, not quarterly. So this thing will pay me money every month for as long as I choose to own it. Whenever it dips under 6, if I have any cash lying around in the accounts, I'll pick up a little GUT because the dividend yield is typically over 10% at that price. By the way, you can call your broker and choose if you want your distributions paid in cash or you want them automatically reinvested. If you choose to reinvest, not only will this pay you every month for the rest of your life, theoretically, you'll also be getting a little raise every month. So what I'm looking for here is monthly income for the rest of my life and a tiny raise every month until I start living off the dividend income, right? Now, utilities are not as boring as you may think. GUT makes pretty obvious lows. I put little white arrows pointing them out. So it's possible to trade it too. The middle arrow horizontal line is at 6. That's where I get the better yield. I wouldn't consider selling unless it's over 660. That's the top arrow. This chart is pretty predictable, and I would consider any price under 510 an extreme bargain. And those typically only happen during times of distress, and we may see some distress soon. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. Gut is one of my personal favorites to generate monthly income, and I wanted to share it with you. Okay, on Swan Watch, I need to start here. This is from 3 days ago. Now, I apologize if you think China has nothing to do with us, but it does, especially in light of BRICS, Taiwan, the recent dumping of U.S. treasuries by China and Japan, and of course, the upcoming U.S. elections. The other reason I'm sharing this with you is because China always lies about its economic performance. So when they actually tell the truth, I consider that newsworthy. Headline: China braces for chaos. Xi Jinping warns of black swan and gray rhino risks. What the fuck is a gray rhino? The Chinese president warned that China must prepare for black swan and gray rhino risks, signaling the country's crises. According to news reports, Xi stated that black swan and gray rhino events could occur frequently. He added that the world is experiencing an extreme transformation and accelerating regional conflicts. Take that hint, guys. For all intents and purposes, the U.S. has no president right now, no leadership. A black swan is an unexpected event with significant consequences, while a gray rhino is a foreseeable risk often overlooked. Oh, okay, I get it. So like when the U.S. owes $35 trillion and we all pretend nothing can possibly go wrong with that. Okay, got it. These concepts convey a message regarding the economic and security crisis in China. In particular, territorial conflicts in the Taiwan and South China Sea, as well as domestic issues like the real estate slump and local government debt, are the problems Xi is referring to. He did mention all the banks that are closing there. Xi used those terms in January of 2019 when China's economic growth rate hit a 28-year low of 6.6%, which I thought was a lie too. He also used it again when the Biden administration took office in January of 2021. I read all this as something is coming from the Red Dragon, guys. Don't believe anything the Chinese say unless they tell you something bad is going to happen. They are telling you swans and rhinos are coming, and I believe them. So the apes were all celebrating this week. Let's review the facts we know so far. Then I'll give you my take on the matter. Short seller Andrew Left of Citron charged with fraud by prosecutors and the SEC. From the article, Fed prosecutors criminally charged the well-known short seller Andrew Left with securities fraud related to allegedly using his public platform to illegally profit from manipulating stock market activity. Left and his firm, Citron Capital, were also separately charged in a civil fraud action by the SEC, which accused them of engaging in a $20 million multi-year scheme to defraud followers by publishing false and misleading statements regarding his supposed stock trading recommendations. I would like to enter here that the SEC wouldn't have done jack shit if they didn't get wind of the civil case. Just my opinion. He allegedly used his public platform to illegally profit to the tune of at least $16 million from manipulating stock market activity, contrary to positions he presented to the public from 2018 through 2023. Well, you know what that encompasses. That civil complaint in Los Angeles federal court accused Left and Citron of engaging in a $20 million multi-year scheme to defraud followers by publishing false and misleading statements regarding his supposed stock trading recommendations. The action alleges fraudulent conduct relating to 23 companies on at least 26 separate occasions. Quote, Leff bragged to colleagues that some of these statements he made were especially effective at inducing retail investors to trade based on his recommendations, and said that it was like taking candy from a baby, the SEC alleged in that complaint. The companies identified in the criminal indictment as ones Leff allegedly traded on in ways contrary to his public stance on their stock prices included NVIDIA, Tesla, Twitter, Meta, Roku, Beyond Meat, American Airlines, Palantir, XL Fleet, Invitae, GE, Namaste Technologies, and India Globalization Capital. Well, what's not on the list, guys? GME and AMC? Yeah, they deliberately left those out. Just my opinion, just like they were filtered out of the Archegos trial. But we know he shorted both stocks, came on TV to mock retail investors, but when he was trading our stocks, he was following all the rules, right? That's what we're supposed to believe. Anyway, the indictment alleges that, among other things, Leff coordinated with hedge funds to disseminate short reports and information to be posted on Twitter. That's right, a consortium. All right, that makes it RICO to me. We'll see. Coordinated with hedge funds regarding the timing of publication and enabled the hedge funds to trade in the targeted securities before the reports were disseminated. Okay, yeah, they cheat. That's how they win. In exchange for sharing his planned announcements with the hedge funds in advance of posting them publicly, the hedge funds paid the defendant Leff a portion of their trading profits, the indictment says. Leff, who lives in Boca Raton, is expected to be arraigned in the next several weeks in Los Angeles federal court on the 19-count criminal indictment. The U.S. Attorney's Office in L.A. said in a statement. By the way, at CNBC, you could download and read the entire indictment. Akil Davis, the assistant director in charge of the FBI's Los Angeles field office, in a statement said Mr. Leff's presence on financial television networks and his significant online following provided him with a credible platform to allegedly disguise his intentions and manipulate the investing public for personal gain. The indictment says that Leff used Citron's online platform to comment on publicly traded companies and claimed that their stock was incorrectly valued by the market, either too high or too low. Leff's recommendations often included an explicit or implicit representation about Citron's trading position and a target price, which defendant Leff represented as his own view of the targeted security's true value, the indictment says. Sounds like Kenny, right? Leff knew that his recommendations influenced investors' decisions to buy or sell stock and thereby empowered him to manipulate the price of a targeted security, the indictment said. By using the Citron Twitter account to generate catalysts, events with the ability to move stock prices, defendant Leff profited from his advanced knowledge that he was about to trigger such movements in the market. After using his influence to manipulate a stock's price, Leff closed his position to capitalize on the temporary price movement caused by his public statements, the indictment alleges. The indictment and SEC complaint give specific examples of Leff's alleged manipulation and exploitation of his contacts with business media outlets, including CNBC. Leff, who previously lived in Beverly Hills, California, is charged in the indictment with 1 count of engaging in a securities fraud scheme, 17 counts of securities fraud, and 1 count of making false statements to federal investigators. If convicted, he would face a maximum possible sentence of 25 years in prison for the securities fraud scheme alone. Guys, I don't think the SEC would have done anything about this if there wasn't the civil case. The SEC is grabbing another smaller fish here so that when they're finally dragged in front of an oversight committee like Madoff was, they'll be able to say, oh no, we were investigating and look, we got this guy and that guy. This guy might be able to flip on some of his contacts in the media. I don't know if he paid them or if, he was already getting a cut from the hedge funds, but we'll see where this goes. But this is why my channel is Swan Crazy, guys. We are fighting the prime brokers, the retail brokers, market makers, regulators, the Middle Earth guys. I call them the DTCC, Limit Up, Limit Down Committee, right? I mean, guys, we are literally fighting everyone, and I believe the only way we could possibly win, including the regulators, is if we get a black or white swan event. Because the regulators are not interested in investigating what happened with GameStop and with AMC. And this, to me, proves it. Okay, let's talk about the movie and theater business. Inside Out 2 sets global animated box office record with $295 million opening. Inside Out 2 is set to become the top grossing animated hit in global box office history. Here's my favorite. Inside Out 2 box office sets record, becomes highest grossing animated movie ever. Ever. The theaters are dead, right? This is the highest grossing animated movie ever. So do we have some momentum here? Oklahoma movie Twisters storms past $100 million box office milestone, 4DX weekend record. So from the previous week, from Tip Ranks, Cinemark price target raised to 26 from 24 at Morgan Stanley. That's ironic because an active Morgan Stanley employee runs our board of directors. Cinemark shares up 4.4% on analyst upgrade. And then July 23rd, that's this past Tuesday, Cinemark sets a new one-year high at 22.23. Now, here's what we got from the financial press. AMC Entertainment price target maintained at $4 a share by Wedbush. Wedbush reiterates neutral on AMC Entertainment Holdings, maintains $4 price target. Guys, this is still going on. Why would you keep putting these hit pieces in the press if there wasn't some risk? So no change in recommendation, no change in price target. We were called by our friends and decided to remind everyone that we think the stock is worth less than it's currently trading now, right? That's just my opinion, but who the fuck asked you, Wedbush? So then they said this on Thursday, the 25th, 8:25 a.m. The stock was trading in the 460 range, and by Friday, the stock ran to a closing price of 518. So Wedbush gives great financial advice. They want to make sure, right, that they do their part in holding the price down, right, or scaring retail investors. When are these assholes going to get indicted? Don't hold your breath. Are these the headlines Wedbush was trying to get ahead of? Deadpool and Wolverine shatters box office records, eyes $400 million global opening weekend. Deadpool and Wolverine goes wild on Friday. Box office, Deadpool marvels with $96 million opening day, the sixth highest of all time. Just how historic will Deadpool and Wolverine's opening weekend be? Come on, Uncle Frank. We've had blockbusters before, like Avatar. Nothing happened. Why do you think this is different this time? Well, it can be different, and I'll give you my reasons. This could be an event for the entire industry, not just AMC. This could be the turning point, something completely outside of Wall Street's control. This coming week's results could mark the official end of the pandemic narrative, the end of the writers and actors strikes' effects on the box office. This is not hopium. These are events affecting the entire industry. Disney, Marvel, Regal, IMAX, Cinemark, and AMC. If this phenomenon happens, it'll start on Monday. If the financial and independent press all begin to announce this weekend marked the end of the pandemic for the industry, not AMC, that'll be big, even for our stock. What I want is a swan event right in the middle of it. Give us an example, Uncle Frank. Okay, I can think of one. How about Ryan Cohen announces his plans for GME? You think that would work? How about we get another case on a short seller like Andrew Left? With AMC at 518, we're above our 50-day moving average of 504, above the 200-day at 431. Over the past week, up 3.39%. Over the past month, 8.37%. Over the past 3 months, 51.91%. Same thing with Cinemark, which is at $21.99, above its 50-day of $19.88, above its 200-day of $17.47, up 2.9 for the week, up 4.02 for the month, up 24.59 for the past 3 months, and up 54.21% over the past 6 months. What about IMAX at 20.09, above its 50-day of 1652, above its 200-day of 1602, 13.25% over the past week, up 18.46 over the past month, up 17.14% over the past 3 months, and up 42.08% over the past 6 months. The industry itself is turning. Guys, never forget, if we get a rally, Adam won't forget to dilute more if they ask him to. He already did, and at worse than garage sale prices, we're still at near 50 cents on a pre-split basis. The limit up, limit down committee won't forget to abuse the halt system to protect Wall Street. They'll use dark pool abuse, hit pieces, whatever they have to do to survive, and the regulators are on their side, not ours. That's why we need to add a swan to the mix to get this done, and no one can promise you one, but that's precisely why I do these calendars. It's my attempt to forecast prime conditions for a swan event, because you can't cheat your way out of a margin call. You can't spoof or naked short your way out of a margin call. Following the 2008 crisis, 700 hedge funds closed. That's what Uncle Frank is talking about. Blowing up the people that are leveraged over 60-1 or higher and won't get bailed out this time because there is no liquidity. Have you seen the repo market lately? Even the Fed has unrealized losses to contend with. Did you know Fundstrat's Tom Lee is predicting a 40% rally in the Russell 2000 by the end of summer? Let's do the calendar. Monday, July 29th, we'll have all the box office results from the D&W weekend. Tuesday, July 30th, the July Fed meeting begins. 10 a.m., job openings and consumer confidence. Wednesday, July 31st, 8:15 a.m., ADP employment, 8:30 a.m. Employment cost index normally doesn't mean a thing. But guys, with interest rates riding on this data, everything employment and inflation related is going to matter. 2 p.m., FOMC interest rate decision. 2:30 p.m., Fed Chair Jay Powell's press conference. Thursday, August 1st, 8:30 a.m., initial jobless claims. And then Friday, August 2nd, 8:30 a.m., U.S. employment report and unemployment rate. Big day. Options expiration day. At 5 p.m. Eastern Time, we get the AMC second quarter 2024 earnings webcast. As it turns out, Tom Lee from Fundstrat may be right about the Russell 2000. Barclays strategists have identified several indicators that suggest a short squeeze may be occurring in the markets. One of the most apparent signs is the dramatic rotation from large caps to small caps, which has been overwhelmingly driven by positioning and technical factors. This trend has been particularly notable in the Russell 2000 Index, or RTY, whose valuation gap with large caps has nearly closed. So what swans are you talking about, Uncle Frank? Are you kidding me? They're everywhere. Now, this list includes swans for subscribers of this channel, so AMC, GME, Archer, XRP, etc. But under geopolitical, Russia, Ukraine, China, Taiwan, Israel, Hamas, Iran, North Korea, the 2024 election, but under systemic and financial swans, U.S. credit card debt crisis, commercial real estate crisis, unrealized losses at the banks and the Fed, 282 U.S. banks at risk, BRICS and the de-dollarization trend. How about the $34 trillion U.S. debt spiral? Maybe a Ryan Cohen announcement or another Roaring Kitty post, but I doubt it. Settlement of the SEC versus Ripple case. The derivative tsunami. Elon Musk could debut the new peer-to-peer payment platform on Twitter. How about an early rate cut from the Fed, or the rate cut could be delayed by sudden inflationary news? How about hidden hedgy over leverage, securities sold yet not purchased, potentially billions of unreconciled synthetic shares out there? How about the China-Japan banking crisis, or the Andrew Leff case sparking other short seller investigations? We've got plenty of swans in the air. Now, do you guys remember the bank Ken Griffin bought with Steve Mnuchin? Here's some headlines from the past couple days. NYCB reports another loss. New York Community Bancorp stock sinks after Q2 loan loss provision swells. NYCB's commercial real estate losses skyrocket amid new leaders' review of loan book. And from Bloomberg, NYCB's Flagstar to sell mortgage servicing unit for $1.4 billion. Here's hoping your little bank takes the pipe by the end of August, Kenny. The bad actors out there are going to love that this story made it to the New York Times. Prominent short seller made millions off bait and switch scheme, U.S. says. Federal authorities filed charges against Andrew Leff, founder of Citron Research, who they said made at least $16 million from a multi-year scheme to manipulate market prices. Just keep it rolling. That's right, guys. We want a perfect storm for our little devils out there. Bad press, more cases, poor performance, redemptions, outflows, no new money, getting caught short on rallies and getting caught long on sell-offs. From Bloomberg, short sellers feel heat after U.S. charges Andrew Leff with fraud. His lawyer warns of a chilling effect on bearish research. Peers predict more spending on lawyers, difficult fundraising. Yeah, we want it to spread all over the world. We want politicians turning on the predatory short hedge funds, prime brokers turning on them, whistleblowers and leaks. We want it all, baby. Short selling. Indian and U.S. regulators are turning up the heat. India's SEBI and the U.S. SEC are probing short sellers, allegedly practicing fraudulent trading methods, violating research norms. The indictment didn't mention GameStop, but the Forbes headline did. U.S. charges GameStop short seller Andrew Leff and Citron Capital with fraud. You think our bad actors are going to take all this lying down? No way. They're going to naked short more and more until they take the prime brokers down with them. Grayscale, Ethereum Classic Trust, short interest up 700% in July. That's from 4 hours ago. CVS Group, short interest up 640% in July. Lexera Bioscience Corp, short interest up 700% in July. Galmed Pharmaceuticals from 9 hours ago, short interest up 1,185.7% in July. Doubling down. Speaking of short interest, breaking yesterday, looking into Archer Aviation's recent short interest. Archer's short percentage of float has risen 15.04% since its last report. The company recently reported that it has 57.86 million shares sold short, which is 26.01% of all regular shares that are available for trading. Based on its trading volume, it would take traders 4.83 days to cover their short positions on average. But also breaking yesterday, 3 speculative stocks to buy before they go ballistic. They mentioned Blink Charging, Bitfarms, and Archer Aviation, positioned to commercialize eVTOLs in 2025, and geographical expansion will translate into stellar growth. Guys, if you get a chance, go see the video connected to this headline. Could you take a taxi in the sky? This company is building some in Metro Atlanta. I put a link to the article and the video in the description of this video, but it's about Archer building their aircraft in Covington, which is in Georgia. It's going to bring 1,000 jobs to the area, and it's incredible. Recently, in regulation, FINRA clears hurdle with CAT launch, but several others remain. Two major components of the consolidated audit trail are now in place, but wrangling over the CAT's future continues. After 14 years of planning, a project to improve transparency and oversight in U.S. markets is finally a reality. The much-awaited second part of the consolidated audit trail went live in May, allowing regulators and market surveillance officials to link specific transaction records stored in the CAT database to the accounts behind each trade. Turns out, before Kenny bought the $45 million dinosaur, he spent $90 million on this 2-acre French waterfront estate in Saint-Tropez. Keep it up, big shot. BRICS. U.S. Central Bank hits $1 trillion in losses. What it means for the dollar. Amid the BRICS' ongoing de-dollarization initiative, the U.S. Central Bank has officially hit more than $1 trillion in losses, which could have a massive impact on the dollar. Indeed, the Fed Reserve has seen its paper losses actualized into more than $100 billion in actual losses. Moreover, there appears to be no relief on the doorstep. Breaking yesterday. BRICS considers Iran's proposal to link payment systems of all member countries, says Russian official. So these would be cross-border payments between these nations. Got it. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.